Well, crypto holders, we are still not rich, and ultimately our portfolio looks a little bit worse today. I haven't looked at my portfolio in quite some time, but I do know for a fact that we are down in a big way. The market feels as if it is relentless with the sell pressure, and it feels like every single day we are just waiting for the next leg down. This will soon pass. I know that right now it feels rough. The market just had another crash, and it feels like this is never ending. It feels like we have this slight little, pause in the market right before the next big swing down happens. But again, when we think about historically the most bearish points in time for crypto, it's also felt similar to that. Looking at the fear and greed index in the last 30 days, we could see that our fear and greed index is about 14 on CoinMarketCap. However, if we go over here to the Bitcoin fear and greed index, we were at about roughly 5. Yesterday, we were at 9. Last week, we were at 12. And last month, we were at 25. It feels like this is nearing that point of, are we going to see a negative fear and greed index, which is not possible. But, again, it's that crazy in this market right now. Fear and greed is at historical lows. And that goes to show you just how rough this market actually is. Now, let's take a look at the total market cap of crypto. This is why the fear and greed index is down to 5. Bitcoin is now below 65K again. The total market cap of crypto just took another leg down. We're at 2.23 trillion. Our lowest point back here was about 2.17 trillion. And it feels as if we are never going to end this, massive downward push in crypto. The main thing that I'm looking at here is if we are going to just continue to sell off here, where is there a potential end to this? And realistically, we go back to 2024 and we go and look at that $1.94 trillion level from roughly September. And that's where I do think we would essentially stop if this is not going to be our low and we take out the low from the beginning of the month. I would like to avoid that. But again, it's questionable on if we're going to avoid that and if we're just going to continue to sell off. Bitcoin still looks pretty rough. This is what the current Bitcoin setup looks like. We did wick down into that red zone. Now, this red zone is basically just demand. It's all price action demand, especially on the lower time frame structure. I would be watching closely for a floor to form on the lower time frame structure before, we get too bearish and too ahead of ourselves. But the main thing that, happened today was we took out the prior lows. And then that caused a much larger cascade on the price action. Also, liquidations didn't help during the weekend, which is typically a low, liquidity sort of time frame in crypto. But also, prior to this, and we were kind of looking at this, Bitcoin was trading in a lower high and a higher low structure. Now, typically when we have something like this is a neutral overall structure for Bitcoin. But the lower highs definitely leads more towards, being pretty bearish. So this pretty much, led with us having this massive drop in the market. It was just bearish price action leading into that, big swing low. Now, I will say I'm watching for potentially a big bounce here on Bitcoin if this is going to be our low. If it's not going to be our low, then we should target the lower tier level of roughly 62.6K. And if we have a 24-hour close below that 62.6K area, well, we would essentially be targeting, and let's just go back on the weekly, we would essentially be targeting the low 54K region. I would argue it's going to retest probably sometime somewhere around the time frame view of roughly like the middle of February of 2024. So what we would actually be looking at is roughly 52K to about roughly like 58.7K. So if this is going to be our macro view, this is where we would essentially look for a potential bottom forming on this chart before having that, much larger macro bounce. But that's if we take out the prior lows, and that's if we start to have a much larger drop in the market. But if we can avoid that, then we should start to see a much larger impulse move from our current area. The only thing that would allow us to see the bottom happened sooner than, expected, would be uncertainty being removed from the markets. Because you might be asking, well, Nick, why is this happening? Like, why is XRP having a much larger drop today? Why is Bitcoin having a much larger drop today? Was there a bearish candle close on the 24-hour view? Ultimately, no. Our 24-hour view close was not that bad. We closed right around like 67.6K. That's a higher low on the chart. XRP, XRP's close wasn't that great. I mean, we did close below the prior support, which led to a much larger drop on this chart, which, by the way, I'll get to the XRP chart in a moment. So again, today, it wasn't like a crazy bearish, price move at all on the chart. So what really caused us to have that much larger drop and have that continuation on this chart? Well, I'm going to go and look over a few things and kind of give you guys the answer to that question. But let's take a quick look at XRP. Now, very similar to Bitcoin, I do have this red zone down here. This is where we would be looking at a lower time frame bottom being printed on XRP. And this could very well lead to a higher time frame bottom being printed as well if we can manage to close over $1.45 and get that continuation back to the high from the 15th. Now, the reason why I have this demand zone is, well, because this is this would be the full retracement of our prior high and our prior low. So this is where I would be looking for a bottom on the lower time frame view. We already tapped the top area here at about roughly $1.33. We could definitely still see continuation down to roughly $1.24 here. But just looking at the daily view as well, what we would mainly want to see if we remove everything off the chart and keep this pretty simple, the main thing that we want to see is a daily candle close and a higher low form above $1.20. We want to maintain those lows from the beginning of the month if XRP is to find a bottom sooner and have a much larger rally sooner as well. Until that happens, until we create a higher low structure and then create a higher high structure off of $1.51, until that happens, I would still be pretty bearish on XRP's lower time frame structure. Now, if we lose this $1.20 level, very similar to Bitcoin having this macro retest of the 2024 price action, where would we, what's the key area of, demand next for XRP? Because we don't have that 2024 price action besides going all the way back down to like 50 cents. Where would we be looking for a potential bottom here? Well, ultimately, I would be looking at the wicks going back to 2021. So the key area here would be about roughly 89.5 cents if we were to take out this $13 level, which would align perfectly with, us also taking out like, the $1.20 level on this chart. It would allow us to retest that wick. And if we lose that, then yes, below $1 could get very dangerous for XRP holders because that could lead to a much larger drop. But this 89.5 cent level aligns perfectly with the price action from July of 2023 when XRP got cleared as not a security. It also aligns with the support zone from 2021 before we had a nice, bounce off of that level. And then also aligns with the support from September of 2021 as well. So this would be the next key area that I would be looking at if this is not going to be our bottom on XRP. So we just need to be cautious here. But again, the question still remains, what caused this price action? Well, number one, the market has been pretty bearish already. Today just really kind of accelerated that. We had liquidations, and again, it's over the weekend, which is typically a low liquidity weekend. So this caused us to have that much larger drop as well. It caused a liquidation cascade, but also it's the uncertainty regarding what's been happening lately, which is of course the tariffs from Trump, which got announced on the 20th. So a lot of people are expecting this to affect the markets in a big way because it's essentially another trade war. And if we do remember the last trade war, it caused Bitcoin to have a, well over 30+% drop in the market. Stocks also had a much larger drop as well. And stocks lately, reacted to this news in terms of stock futures in a negative way as well. So that definitely affected the market in a big way. And if we do also remember, it's not just tariffs, it's also the Iran situation. We know on the 19th that Trump made a statement regarding a 10-day deadline to Iran, which basically said that, make a deal with us And if they don't want to make a deal with us, then they'll find out in about 10 days. So everyone looked at this essentially as a, war signal that we were going to go to war with Iran. So everyone is looking at this and saying, all right, well, you know what? The markets are definitely not going to like this. So, let's sell, let's get out. So that could definitely, be a main thing affecting the markets. But also, we just got another big update regarding the Iran situation, which is over here. We have Trump may consider strikes on Iran. This happened at 5:31 p.m. earlier today. And if we're thinking about when Bitcoin started to have that massive sell-off, it started right around It started right around like 6 p.m. So it was kind of right around this time. It was like 30 minutes later. So the markets kind of reacted to this. And we have here Donald Trump is reportedly considering limited airstrikes on Iran. According to the New York Times, potential targets include the Revolutionary Guard, nuclear facilities, and missile programs. So again, this is definitely something that could definitely scare markets in a big way. And they even said that if these strikes, failed to pressure them, that there could be a broader effort. Now, we also have at the bottom, at the same time, U.S. and Iranian officials are discussing a proposal that would allow Iran to produce small amounts of nuclear fuel for medical use, letting Iran maintain limited enrichment while the U.S. claims progress in curbing its nuclear program. So, again, let's see what happens here. Obviously, if a deal is made, I do think that that's a lot of uncertainty removed from the market, but we still have those tariffs that could definitely pressure the markets a bit more. We have over here, precious metals are surging while stock markets futures open negative. Gold is up nearly 1%. Silver's up about 2.15%. Investors are moving to safety amid rising uncertainty around tariffs and the U.S.-Iran conflict. So again, people are just looking at Bitcoin and looking at crypto, and they're saying, well, this is definitely not, a stable safety net for us. So they're looking at other avenues, which is, again, gold and silver. So they're looking at this, they're getting out of crypto, it's causing the markets to drop more. Then we have the liquidation cascade. So it's just all a recipe for disaster. Now, at the same time, we also, if you guys do remember, we already have a ton of uncertainty in the markets already. Coin Bureau posted this on the 18th. This also got accelerated from the recent tariff announcements. And then, of course, with Iran, we have here that the world has never been this uncertain. Global uncertainty just reached the highest level in history. The World Uncertainty Index has now surpassed every major crisis, which includes, of course, 9/11 attacks, Iraq war, COVID-19, all fueled by Trump's tariff war shaking global trade. We are now in uncharted territory. Now, again, it's not just a trade war. We also have a potential war breaking out with Iran. So just imagine how uncertain the market is. People do not want to invest money into risk on assets. They want to park their money in gold and silver, which is also why we already recently witnessed gold and silver go absolutely parabolic. It's because people are parking their money in things that are a safety net at the same exact time that the dollar is collapsing. The dollar is losing more and more value. So people are looking at, other avenues of, putting their money to work. This is also at the same time that we're starting to hear talks about, interest rate cuts as well. So again, people are not looking at money market funds anymore. They're looking at other key markets, hence gold and silver. Now, this week, we also have a ton of big events as well. So Cryptos R Us posted Monday, markets react to Trump's new 15% global tariff. Again, major uncertainty on how the markets are going to perform. Tuesday, we have consumer confidence. Wednesday, Nvidia earnings. Thursday, initial jobless claims. Friday, PPI inflation. All week, 11 Fed speakers on deck as well. Macro is stacked and liquidity expectations can shift quickly. Stay sharp. And yeah, I mean, let's be honest here. Let's look at things logically here. So although, yes, the market is down in a big way, we have to watch for a potential bounce in the markets to see a potential floor form on the lower time frame view before we get bullish again. At the same time, we need to see how markets open today. With everything happening, again, it could definitely be a further bloodbath today, depending on how markets open. So we need to be cautious of that. The overall, view here is that crypto is not going to just suddenly die. Yes, it sucks. Yes, the market is down in a big way. We could have a much larger drop in front of us as well. But nothing is certain, right? This is not a guarantee. We could easily bottom anywhere between our low of 60K or so to where we are at right now. But the only thing that we have in front of us is, our low that we have recently. And if we lose that, then yes, this red zone essentially would be next. That's the only thing stopping us from a further cascade. So this would essentially be our lifeline around 60K on Bitcoin. On XRP, our lifeline is about roughly $1.13. So we need to just be cautious here. Stack stablecoins if you can. I would not be, jumping into buys until we start to see a floor form. One of the key things in this market, and I know that a lot of people hate me for saying this, is, I would rather buy higher knowing that the path in front of us is a larger percentage opportunity, meaning I would rather have that, 60% plus potential of us trading higher than us not knowing what could happen next. Because buying right now, you don't know what could happen next. But if we have a, potential swing high on the 24-hour view and, we break over $1.51, well, that gives me a much larger opportunity of knowing that we are going to be trading significantly higher in the coming, days, potential weeks. So buying higher is not a bad thing every single time if you know that there's a higher percentage chance that we are going to be trading higher. Again, you don't want to be trying to catch a falling knife in the market, not knowing what could come next, especially at a time where we have tariffs and a potential war breaking out. So just be cautious here. Main thing that I'm watching for is us to have a higher low form on the chart. So I would like to see a potential high above like $1.30, but it's question one if that's going to happen. Main thing that I'm looking at today is just traditional markets, seeing how stocks open and things like that, and just what the markets think of, this new tariff update. So with that being said, I hope that you guys enjoyed this video.